MetaTrader. We'll talk about the MACD. What is the MACD? It's the moving average convergence divergence. Really long name for something we can just call MACD. Moving average convergence divergence. MACD. And it's something that we do use on occasion. What is this MACD? It's a trend line. It's a trend following momentum indicator. What it does is shows a relationship between two moving averages of prices. The MACD has its own formula, but we're really not going to use it since your Ava MetaTrader will calculate it for you. But just in case you want to know, the MACD is calculated by subtracting the 26-day exponential moving average, EMA, which, we might want to talk about EMAs at one point, maybe next time, from the 12-day EMA. A 9-day EMA of the MACD is called the signal line. It's then plotted on top of the MACD, functioning as a trigger for buy and sell signals. Now, let's open up an MACD on the silver chart, see what it looks like. Okay. What you do is you go to Insert, Indicators, and then you go down. Hold on. MACD, what happened to it? There you go. Go down to oscillators. You see your relative strength index, which we've spoken about before. At one point, we're going to talk about Ishimoku clouds, but today, MACD. You click on MACD, it opens up colors, main, signal, and so on. And then you hit OK. Here is your MACD. Now, how do you read this? There's three ways to read an MACD. Crossovers, as shown on the chart. When the MACD falls below the signal line, I'm using bars for the signal line, it is a bearish signal, which indicates it might be time to sell. However, when it crosses above, it indicates a bullish signal and maybe a time to buy. That's one way. Divergence. When the security price diverges from the MACD, when it does something different, when the price is doing something different. So as you can see here, it's moving below, which indicates it could be a time to sell, but it's doing just the opposite. That's divergence. A dramatic rise, when the MACD rises dramatically, as we can see here. We can see it rising dramatically. That is the shorter. What that means is the shorter moving average pulls away from the longer term moving average. That could signal that security is overbought and will soon return to normal levels. So here we see a dramatic rise. Okay. Traders also watch for a move above or below the zero line. Here's the zero line right here, because this signals the position of the short-term average relative to the long-term average. When the MACD is above zero, as it is, as you can see here, here's the zero line, okay? And as you can see there, the MACD is going above the zero line. The short-term average is above the long-term average. This signals upward momentum. The opposite is true when it falls below the zero line. And you also can see the correlations in the chart above as well. This is the MACD. It's another resource to use. You can use it along with the RSI and along the CCI, and it'll help indicate buy and sell. And I think next week we'll try to put everything together next week for you, and see what the MACD, the RSI, and the CCI all look together, and how they perform together. And maybe that'll help you as you continue your trading, and will help you buy and sell, hopefully be profitable, and that'll make you happy, that'll make me happy, that'll make everyone happy. But together, by using any tool you have at your disposal, can only help you. And I'm going to try week by week showing you what tools you have on what I must admit is a good trading platform, the Alpha MetaTrader, and how they will help you. And let's pick up next week. We'll put all three together: the MACD, the RSI, and the CCI next week, and we'll look at all three together and see if we can use them all three at the same time. All right, guys, have a great week trading. I'll be back tomorrow with a currency or forex or equity analysis. As always, leave me some comments and suggestions. Let me know what you think about this MACD here. Tell me where you think a security is overbought or oversold, and give me some answers.